Welcome back to Ape Asset Alternatives. Today we're going to be talking about support and resistance. We're going to be talking about daily levels, weekly levels, monthly levels. We're going to be talking about volume profile and Fibonacci and how we determine if a level is going to hold using Market Cipher. Okay, so let's start on the monthly levels. How does one get a monthly level? Is basically when two consecutive monthly candles fail to close below or above a certain price point. Like right here, we can see that we fail to close above 61.4. And we take a horizontal ray, we put it right here. Basically, we tag it on a chart monthly. And now this is our monthly resistance if we ever pump to 61K. Now we can see that here's another clear monthly resistance level, monthly at 45K. Okay, and these are two untapped monthlies which will probably guarantee us a reaction because the level hasn't been tested yet. After it was created, it hasn't been tested yet, so that means that a reaction from that level is very much likely. But on the other hand, we can see that here we had a monthly level, two candles failed to close, new candle was made basically. We can see that we came back up to test it, and so the next time we were at this level, it basically didn't stop us. It wasn't acting as resistance because it was already tested before, right? So we pumped higher. But in this case, this level right here hasn't been tested yet, so this might give us a strong reaction. Okay, now coming to weekly levels. Weekly levels are basically the same thing, but on a weekly time frame. And I know for a fact that we just formed a new weekly level right here. So basically we put it like this, tag it weekly, and leave it on the chart for future reference. Weeklies also have to be untapped for them to have the most potential for a rejection or basically support. But yeah, this is how we get a weekly level, and always use these levels in confluence with another, like let's say a Fibonacci or something else. Now, a daily level is also the same thing, just two consecutive candles that fail to close below or above a certain price range. And we have a daily right here, which we can use as a support. We just tag it daily. And now this is our daily support level we gotta be looking for when we're coming down. So yeah, basically just mark these levels out on a chart and keep them in mind for future reference. So this is how we get daily, monthly, and weekly levels. Okay, so another way of finding support and resistance is using the Fibonacci retracement tool. This tool calculates retracements and projections based on the Fibonacci sequence and is often used to find potential price reversal points. Now, in strong trending markets, we usually find support or resistance at the 382, and then we go for another leg up or another leg down. But when using it for like scalps and day trades, we usually find support or resistance at the golden pocket. And then we retrace to the upside or to the downside. Now, if you want to find supports, it's as simple as pulling it from the low, the swing low, to the swing high, and then just finding a level that has more confluence. Let's say this golden pocket right here is also a previous support and resistance flip. You can see obvious support and then resistance right here. So this indicates that this level might have some confluence and that this is a good long opportunity, I guess. Now, if you want to find resistances, you have to pull it from the swing high to the swing low. And what do you know? We reject right in the golden pocket for another leg down. So basically this is just the quick and easy 1-2 on how to use fibs. In addition to these tools, we can also use volume profile to determine support and resistance ranges, right? This indicator displays the distribution of trading volume at a different price level and helps traders see where the market has been active. Okay, so fixed range, volume profile, go under the long position, fixed range. We can see that Bitcoin's been ranging for most of the time, and we pull a fixed range. Now, we have a value area. We have a value area high. This is just the highest price at which the asset has been traded in this value area. Then we have the value area low, which is the lowest price where the asset has been traded, right? And then we have the POC, which is the point of control. This is basically where most volume has been traded, right? Okay, high volume levels like the value area high, the value area low, and the POC indicate that a particular price level has significant support or resistance and is more likely to hold in the future. Now, how to know if a level is going to hold or not? Now, for this method right here, the one I use is using Market Cipher. You can sign up to Market Cipher using the link below. But yeah, Market Cipher. Okay, so short and simple, we have the value area high of the very huge range, right? Let me zoom in. Price makes higher highs into the resistance, right? And what does the Market Cipher do? On the daily time frame, a bearish divergence. As we make a higher high, the daily time frame Market Cipher B makes a bearish divergence. And what's next? We basically dump 24% to the bottom of the range. And what happens here? We can see if we go on the 4-hour time frame, let me zoom in, zoom out. Okay, if we go on the 4-hour time frame, we can see that as price was dropping this whole time from here to here, right? Market Cipher B is printing a bullish divergence and the money flow is going up. So we can see that there's multiple signs of this level of momentum coming up and this level holding, right? Now, what happens next? We pump 14%, 15% from the low of the range using Market Cipher. Okay, yeah, so that's it. We use Market Cipher to determine if a level is going to hold. We learned how to mark out dailies, weeklies, and monthly levels, and we learned how to use fibs and volume profile. Don't forget to sign up to Market Cipher to help the channel, and stay trading. Happy trading, boys. Let's get it.